Come on. Here we go. Here we go, loop-de-loo. And we are ready to roll. Yes, we're ready to rumble. Let's get rolling. Ooh, Cassandra. Good evening, AG. How you doing? Alpha. Ijo. Crisp. What's happening? Firdt. I have no idea what that means. Is that Fi or Fi? Yeah, it's Fi. Firdt. That doesn't mean anything to me. Anyway, Bo, what's happening? Elvis is in the building. Nocturnal. White Tiger. House of Hoops. Spanna. Dividend King. Oh, Dividend Stock Talk O'Clock. Jessica King, how are you today? Raouf. Interesting name. Cool Beans. BBWI. BBWI. Bed Bath Body Works. Woohoo! Double jolly good. Let's get started. Hey everyone, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you along for the ride, allow you to see over my shoulder, see what I'm doing, and how I consistently get 1% every single week using nothing but pre-qualified dividend stocks, and those are companies that consistently increase their dividends for more than 2 decades. That's 20 consecutive years. Rude Dude, what's happening? Jay the Holder, Internet Explorer. Cool beans. Tom, nice to see you here, Tom. The Healthy Tree, cool. You ever read The Giving Tree? What a good book that is. Mall Avengers. Oh, Maui Avengers. Ooh. Lester Acosta. Okay, anyway, let's just jump in, get started, and what do you guys want to look at tonight? Tomorrow is week, 48, 49, 50, 51, 52. Tomorrow is week number 48. Week 48 for the year, the first week of December, and we have a bunch of stocks that we're going to be looking at because I am looking for a safe, predictable, consistent 1% per week. It's got to be simple. So let me give you a quick, Aiden Wilson, how you doing? Let me give you a quick story of how this whole thing started. Now, I've been trading for almost 20 years. Julie C., how are you? Joseph, what's happening? I've been trading for about 20 years. My first 5 years really weren't that great, to be 100% honest with you. I made a lot, I lost a lot. It was just, up and down, up and down. Aiden, I'm doing good. Thank you for asking. So here's the thing. In 2008, Mark Dunn, how's it going? AT&T, we already did AT&T, we already said no. I don't do AT&T, look at it, it's at the high of the year. No. You're a millionaire, cool beans. Dave, how you doing? Link Nasty, interesting Link Nasty and Hugner, is that right? Hugner LSI. See, XRP is not a 20-year increase dividend stock. Thanks, Aiden. XRP just tipped Tether. Yeah, really don't care. 100% honestly, really don't. XRP does not have 20 years of profits. Okay, 20 years, that's 2 decades. ERX, what the heck is ERX? An ETF. Yeah, they're usually a no. Sorry. But anyway, Julie C. wants to take a look at Target. I want to take a look at Target too. I want to see what happened to this right here. See that big, huge drop? I knew that would happen. And we even talked about it too. Star. Coca-Cola. I'll write it down, but it's usually going to be a no because Coca-Cola is a Dividend King Elite. What does that mean? That means, oh boy, Link Nasty. Hold on. I got a message for you. Just chill for a second. Okay, Coca-Cola, Dividend King Extraordinaire. They've been in business for over 140 years. They're probably going to be in business for another 140 years after I'm gone. There's Coca-Cola on every single continent on the planet. Okay? However, Coca-Cola just doesn't have good premiums. But if you're okay with 12 to 24% per year, Coca-Cola's great. It is. Because they pay about 0.5% per week. I don't want to do that. So Link Nasty, you think I'm going to miss the opportunity of a lifetime? Well, I'm 60 years old, number one. Number two, there has never ever been an opportunity of a lifetime that was 100% guaranteed. So just to give you a little tidbit of where I am at my point in my life, okay? Just kind of curious. Number one, you're going to get to a certain point in your life, certain phases. Okay, and we all know the early phases. Your childhood, your adolescence, your preteens, your teenage years, your high school years, the heydays, your college years. Then just after you got out of college, then you start building a family. Then you start building a career. Then at that point, you start thinking about retirement, the golden years. What am I going to do? Well, great. Well, retirement came for me last November. Okay, I just said no more work for me. I took the money that I have, I invested, I make 1% a week. 1% a week pays my bills just comfortably. I am no longer, okay, Link Nasty, listen very closely. I am no longer motivated by money. So, opportunity of a lifetime, no. Okay? That you're hitting the wrong button for me, dude. Seriously. Okay, I make enough. Okay, it reminds me of that, scene in a woman, scene in the movie Pretty Woman with Richard Gere, okay, where he says, with the old guy who owns the shipping company, all right, no, they build ships. He says, well, I'm going to make you a very rich man. The old guy says, I'm rich enough. I don't need it. I'm not motivated by the almighty dollar, but what I am motivated by is the consistency and the simplicity and the, what do you call it? Consistency, I get lost once in a while. That's what you get that to look forward to too. You get to a certain point in your life and just things just ain't the same as they used to be when you were younger. So anyway, simplified, opportunities of a lifetime doesn't really mean anything to me because I am comfortable where I am. I have no desire to risk anything. Because let's just say, hypothetically speaking, this XRP, this young buck, we're going to call it a young buck because it's not 20 years old. It does not have 20 years of increased dividends. Until it gets 20 years old and increased dividend, then I'll take a look at it. Until then, I'm not interested. I'm not looking for a shiny object. I'm not looking for my stock to go from here all the way up to here. No. I want safe, simple, predictable, and consistency. That's what I'm looking for. That's it. I'm not looking for a pie in the sky. I'm not looking for a shiny object. That's why I do this trading strategy. It's simple, it's easy, it takes me less than 10 minutes. That's why it's called the 10-minute trader. It takes me less than 10 minutes to make 1% a week. Now, let's say hypothetically speaking, I have $100,000 in my account. 10 minutes a day, at the end of the week, that's 1 hour. 1 hour on a $100,000 account, making 1%, that's $1,000 an hour. Well, I got a little bit more than 100,000, but just to give you an idea, that's $1,000 for 1 hour. Could I put in 2 hours and make 2,000? Yes, I could. Is that what I'm looking for? No. I would prefer to hang out with my grandson. He's 4 years old. Not a very good conversationalist, but he's fun to hang out with. Now, my kids, different story. Okay, now all of them live on the same street. My son bought a house across the street from my son, and my daughter moved in with my son. So my 3 children are all on the same street, 95 feet away. So my son's here, and my other son is here. My daughter lives there too. It's awesome. I go down there, I hang out with them. I hang out with my oldest son, I hang out with my younger son, then I hang out with my daughter, then I hang out with my grandson, and then I hang out with the in-laws. I have a blast. My life is wonderful. So your opportunity of a lifetime, I'm living the opportunity of my lifetime. I could hang out. My mother's down there. I go hang out with my mother until I can't take her anymore. I'm sure you all know what that means. I love my mom, but after about an hour or so, thank you, Mom. Nice visiting you. See you later. Sorry, it is what it is. So I hang out with my mom, do some work out over her place. Then I go to my kids' house and I go hang out with them. And then after I'm done, I want to come home and I want to be left alone in the peace and quiet. No phones ringing, no kids, no dogs, no animals. Yeah, I'm living the dream of a lifetime. So don't tell me that I'm going to miss an opportunity of a lifetime because I'm perfectly happy right where I am. Okay? That being said, XRP. Come talk to me in 19 years, and then I will look at XRP. Until then, don't want to hear it. Sorry. Okay, so let's keep on going. Tessa, I was using my, I'm not even going to read that one. I didn't realize the do, and I got to put, okay. Yeah, whatever. Tessa, okay. Damn, Coca-Cola. Okay, well, let's, uh-oh. Damn it, I just got tossed off. Now, this happens every week because Think or Swim updates their website every week. All right, I'm still on this one. All right, let's get out of there. Let's take a look at Coca-Cola, and I'll show you exactly what I mean. Coca-Cola. Here we go. Take a quick look at Coca-Cola. Here's the high right here. Here's the low right here last year in December. Now, she went up, went sideways, dipped, shot up, pulled back. Now she's going back up again, currently sitting at $64. That's where it is. You can argue all you want. The numbers are what the numbers are. Really don't want to hear it, okay? So, currently, I'm going to open this up a little bit so we can see it better. Currently, I can buy it tomorrow morning at $64.14. Great. Well, the $64 strike price is going for 43 cents. I'm losing 14 cents right off the top. What am I walking away with? Somewhere in the 20s. That's like 1/3%. Coca-Cola doesn't have to give big premiums. They're a huge corporation. Okay, we get big premiums from smaller companies. But you know what? I still like them. I still look at them, and every once in a while, Coca-Cola will give a 1% or more. But for the most part, they don't. AP, CVX, that's Chevron. Okay, hold on. AP, Chevron, CVX. Interesting. Take a quick look. Here's the high of the year back in April. The low of the year here in September. A year ago, we're at 148. Now we're at 161. Okay. She dipped, went up, dipped again, went up. Here's where we are. It doesn't look that favorable because stocks only go up and then they go down. Look where it is right now. 30 days ago, we're down here. I got to change this screen a little bit so we can see the edge. There we go. Okay, 30 days ago was the low. Wednesday was the high. Yeah, now it's starting to come down from the high. So Chevron, even though I do like the company, it's not going to look good for this week. But in 2 weeks, CVX will be a good candidate. CVX. That's third week of December. So right on the third week of December, we're going to come look at CVX again. Because your 30-day bottom, 30-day top, now there's going to be profit taken. They'll probably take profits for a week or two. Week or two puts us into the third week of December. So we will come back and take a look at this in December, mid-December. All right, so no to CVX. Okay, NP Dog, what's happening? PLTR, yeah, no, dude, no dividends, no thank you. Yo is. Yeah, Coca-Cola's a no for me. Not for you. I do not give advice. I do not give tips. You guys give me something to look at, I will take a look at it, and I'll give you my opinion. I have certain criteria. Criteria number 1, never buy something you do not know and you do not understand it. I really don't know who the hell PLTR is. There's no reason for me to know who they are because they don't have any dividends. Okay? XRP, I know who they are, and I know for a fact that they haven't been around for 20 years, so there's no possible way that XRP can have 20 years of increased profits. Okay? Let's keep on going. Alex, how are you today? Simone, how are you? Alrighty. AP, we already looked at Chevron. Hello, David, can we check Google? Well, Bicky, I'm not quite sure where you got the name David from, because I always say, hey, everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trade. It's always been James, sorry. Even my name, okay, anyway. Google, no, Google has just started paying dividends. So if Google just so happens to be purchased by Warren Buffett, it won't make my list because I only look at companies that have 20 years of consistent profits or if it's on Warren Buffett's list. Warren Buffett doesn't think Google's a good buy, so why should I? Okay? Do you consider yourself as a day trader? No, I do not. I'm a weekly trader. Consistency, yeah, that's exactly. Consistency, predictability. Every trade that I do, I know exactly what I'm going to make before I do it, because I use a trade that's one of the safest trades out there. It's called the covered call, where you buy the stock, you sell somebody the rights to buy it from you from the exact same place you paid for it, same price you paid for it, and you get to collect a premium. It's called a stock option, a covered call, one of the safest strategies there is. The KISS method. I'm not quite sure if it's the KISS method, but okay. Princess Elsa. Cool beans. I have no idea what that means. All right. Let's keep on going. What are we looking at? XRP is a no. MELL. What the heck is that? MELL. Now, usually, if I say, what the heck is that? Usually it's going to be a no. MELL. Never heard of it. It has no options. Pfft, no. Oh, okay. Raul, Aurora, you actually got to give me the ticker symbol. Joseph, Walmart, WMT, it's always going to be a no, especially when it looks like this. Now, a lot of people will say, buy Walmart, it keeps going up. Yeah, it does, but no, it doesn't. See, up, down, up, down, up, down, up, down, up, down. Well, now it's going to the upside. Eventually, it's going to come down. I do not buy at the high. Hi, James, Aurora, okay. Yeah, Raul, you got to give me the ticker symbol for Aurora. But here's the thing. I've never heard of them. So if they don't have 20 years of increased dividends, then it's probably going to be a no. And weekly options. Got to throw that in there too. Got to have weekly options. Oh, MELI. Melly. MELI. Interesting. That's going to be a no. And here's the reason why MELI is a no. It's out of my price range. So whatever you think, whatever money you think I have, you think I can afford, what is it, $2,100 a share for a stock? Yeah, no. Here's the thing. If I'm going to buy a stock and get 1%, I'm not going to buy it at $2,000 a share. I will go and take a look at Bank of America. What is that, 34 bucks? General Motors, 45 bucks. Ford, 11 bucks. Walgreens, 9 bucks. I'm not going to spend $2,000 on anything. Terribly sorry. Now, someone else is asking me about XRP. I have no idea about XRP at all. Seriously, I don't, because it has no concern of mine, because it is a relatively new kid on the block. I'm sure some of you know who new kid on the block is. Yeah. No, 20 years or more of increased dividends. Okay. NU, what the heck is NU? That's not a good thing when I say, what the heck is this? Okay, new, NU. Well, let's take a look, because the numbers look okay. They had a big drop, but do they have consistent increases in their dividends? Are they consistently profitable? To find out that information, I go over to Yahoo Finance. Now, you can use Google Finance, you can use Yahoo Finance, you can use the New York Stock Exchange to find out information. You can use almost any financial website to find out what the information you're looking for. Well, right now, I'm looking for how consistent are they with their dividends. NU, no dividends at this time. No dividends, no thank you. All right, let's go back. APAM, what the heck is APAM? It's never a good sign if I say, what the heck is this? It's a no is what it is. APAM, monthly options, no thank you. Okay, what's that? Universo? Okay, Universo. There's a difference between monthly options and weekly options. Monthly option, I can do it once a month. That's 12 times a year, which means if I'm getting 1% to 2% for each option trade that I do, that means I'm getting 12 to 24% a year when using a company like this. And then I've got to guess, okay, look, this is 30 days. Up, down, up, great. Where's it going to be in the next 30 days? It's hard enough to figure out where it's going to be in 5 days using a weekly. Really challenging to find out where it's going to be in a month. So the difference between weekly and monthly. If I'm getting 1% to 2% every single trade that I do, well, a monthly will get me 12 to 24%. Okay, that's fine. Better than most people are getting. But here's the thing. Weekly options, this 52. So if I'm getting 1% per option contract, That's 52 to 104% return. So do I want 12 to 24 or I want 50 to 100? I don't like monthlies. The numbers just don't work out for me. And then trying to figure out where is it going to be. If it goes against you the wrong way, you're so far out of the money, the next time it's going to be almost impossible to get a halfway decent premium. No to monthly optional stocks. Sorry. Richard, how are you today? Jill. Uh-oh, Jill has something to say. Oh, I'm missing all these questions. Jill Bruner, where's your question? Where's your question? There it is, right there. James, have you noticed historically the premiums generally lower in December? No, Jill, 100% honest with you, I haven't noticed that. Okay, I don't really pay that much attention. I mean, I don't look at historical payments year after year after year. I look at what am I doing today? What do the numbers look like today? Well, let's take a quick look. Okay, 1624, the 1650s. All right. This is what I look for, Jill. You ready? Macy's is currently at 1625. The 16s are going for 50 cents, well over 1%. The 1650s, 27, well over 2%. Okay, if the numbers are working, I really don't take into consideration, well, what were the numbers last year? What were the year before? What were the year before? I don't pay attention to that. And I don't think I'm not quite sure if there is a service that follows the option pricing year after year after year. I know they do with the stock price. I don't know if they do with the option price because the options keep expiring where the stocks don't. Mellow me to retort. Melly is a South American Amazon. Okay, now I know who they are. Still doesn't work. Thoughts on Chainlink? Bradley, never heard of Chainlink. Okay, Mellow me to retort. We already looked at Melly. It's going to be a no. User, we'll call you Chuck, wants to take a look at AGNC. Didn't we look at AGNC last night? Last 30 days. Here we go. Yeah. So AGNC, we looked at this one yesterday. The 30-day bottom is around 940. We hit the low of the year at 915. 985 is the top. Pulled back there. She's coming to the downside for AGNC. That's just my opinion. Oh, Selena Brown. Why is XRP a no? XRP is not a stock. Okay? XRP has not been around for 20 years. XRP does not have 20 years of increased dividends. Matter of fact, XRP doesn't have any dividends at all. No. It's just plain simple. Really want your thoughts on AGNC. We just looked at AGNC. Okay? Just looked at it. AGNC. Okay? A year ago, AGNC is down here at $9. Okay? The bottom of the year is $8.80. The high of the year is $10.82. She drops, she pulls back up, now she's going down again. Okay, I mean, don't get me wrong, it's an interesting company, but you know, it goes up, it goes down, it goes up. Well, now it's going down. That's just my opinion. If you like it, that's up to you. I don't tell anyone what to buy, what not to buy. I just look at the numbers. That's it. And the chart, I can get a third grader in there, you know, 10, 11, 12-year-old kid saying, oh, look, up, down, up, down. That's all it does. It's actually that easy. The trading strategy I'm showing you was created for my 9-year-old daughter. And I love doing this every time. Here we go. Let's do it again. And here it is right here. Yeah.
Hi, I'm JC, and you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return.
That's me, 15 years ago.
What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
I laugh my ass off every time I see that. So the trading strategy I'm showing you was created for my 9-year-old. Back in 2008, when she was 9, she's no longer 9 and she doesn't get on my lap anymore. It's just a little disturbing if you think of it that way. But here's the thing. She jumped on my lap and said, Daddy, can you teach me to do what you're doing? So I said, okay. So here's the challenge. And it is a challenge. First of all, it has to be simple. It has to be safe. It has to be predictable, consistent, and no way that she could lose. So what kind of strategy can I come up with that actually has those 5 criteria? Simple, safe, predictable, consistent, no way to lose. Well, the covered call. You buy the stock, it never expires. You own it until the day you sell it. Rule number 1, never buy something you do not understand. If you do not understand the company, if you don't want to hold it for the rest of your life, do not buy it. Stocks go up, stocks go down. See, stocks go up, stocks go down. Stocks go up, stocks go down. You're going to buy something, it's going to drop. Flip side, you're going to buy something, it's going to shoot to the roof. Don't think you're special. Don't think you're jinxed. That's just the way the game is played. Stocks go up, stocks go down. I like to have all the odds and probabilities in my favor. So, as I'm watching a stock that I like, because there's 9,753 different companies available to choose from any day. Out of those 9,753 companies, only about 300 meet my personal criteria. Consistently profitable and have weekly options. That's it. Just two criteria. However you want to look at 2. Consistently profitable and weekly options. I don't want to put my money into a company that doesn't know what they're doing. If you can't turn a profit year after year after year after year, why the hell am I going to give you my money? That's my philosophy. Weekly options are a must because I want weekly cash flow. I was born in the 60s. I was raised in the 70s, 80s, and 90s. I'm used to going to work 8:30 Monday morning, getting paid at around 5 o'clock on a Friday, and going home. Same thing happens with stock options. I buy the stock on a Monday, I sell the option on the Monday, and on a Friday the option expires and I know how much money I made for the week. And it's very predictable because I know what I'm making every time I make a trade. I know before I make a trade. I don't buy something and wait for it to move. I already know what my profit is before I even get into it. And then we're going to do a couple of those trades in a little bit as we progress through the night. But as we're looking, certain things have to happen. The numbers have to be right. Oh, wait a minute, the 5 rules. Okay, rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. It defeats the purpose of the whole thing. Rule number 3, make sure the company is consistently profitable. Me personally, I like 20 years of profits. Dividends, same thing. If the company's paying a dividend, and the dividend is a portion of the profits, if the dividend increases, that means the profits increase. If the profits increase, that means the dividends increases. So I just go right to the dividends. Have they increased their dividend this year? Great. I really don't need to read all those pages of quarterly reports and annual reports. Either they're making money or they're not. I don't know how else do you look at it. Okay, if the company made $3 billion last year, well, are they making $3 billion and one this year? Well, that's profitable, more than last year. If they're making $2.99 billion, well, they're not making more money this year. Higher is higher, 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 higher. I don't want to go 2 steps up, 1 step back. I don't want to play that game. Consistently profitable, that's it. Okay, AGNC, we just showed it to you. It's in a downturn at the moment. Okay, that's just my interpretation. If you like it, you buy it. It's not a tip. I just give you my opinion. MSTR, I just said a couple minutes ago, no dividends, no thank you. No weekly options, no thank you. Albemarle, that's a good one, ALB. On my list, I have bought it throughout the year. Let's take a quick look. The high of the year back in December. The low of the year somewhere in August. Look at this, shot up, pulled down, go sideways, back down. Now she's up right here at 107. Let's take a quick look at 107. There it is. And currently the purchase price is 108. The 108s are going for 216. That's more than 1%. That's what I look. That's what I'm looking for. More than 1%. Great. Well, last 30 days. Let's zoom in really close right there. Okay. Here's your bottom right down here. Up, down. Here's your top. She pulled back. She went back up. Now she's coming back down again. So Abelmal, although I like it, I even like the premiums, but it's in a downturn. That means I'm going to put Abelmal on my list for 2 weeks. And the reason why I say 2 weeks and not 1 week, well, look at the movement. Here's your 30-day bottom right down here. You see where it is way up here? It doesn't have big, huge moves. So I'm assuming from here back down to here is going to be about 2 weeks. That's just my assumption. Maybe we'll look at it next week. All right, really want my thought. I gave you my thoughts on AGNC. APAM, looked at that one. It's a no. Chainlink, never heard of it. XRP, Melly, yep, looked at those already. Michael Osborne, Realtor. How are you today? NHI. What the heck is NHI? That's never a good thing when I say, what the heck is this? What the heck it is a no. NHI, a monthly. I already give you my opinions on monthly. The numbers just don't work. Okay, user 72141672. Yeah. AGNC, already looked at that. APAM, XRP. Can't you guys get that? No. Thoughts on Chainlink? No. MSTR? No. NHI? No. The Eye of Ra. Ooh, good movie. Well, allow me to retort. Mericradolobi. I have no idea what that is, dude. None whatsoever. You guys give me all no's. MSTR, no. APAM, no. Melly, no. MSTR, no. AGNC, no. ALB, no. XRP, no. Wellman calls, yep. NHI, nope. Ooh, here we go, new one. Bicky Dillon, Nike. No, you guys really only have to suggest it once. You don't have to put it in over and over and over again. I go through every single question and I read every single question. I don't skip over them. It might take me a while to get to them, but I do get to each and every question. All right? So, Nike, here we go. The high of the year back in December around 124. Drops all the way down to July. Look at that, July and August. That looks like what was it, 1, 2, 3, 4, 5? 5 times. That's some pretty good support right there. Back up, back down. Now we're at 78.77. Okay. So at 78.77, we're looking at the 79s, and those are going from 82 to 89. That's well over 1%. So let's take a better look at Nike. Okay, last 90 days, check it out. 5 things I always want to look at any chart. 5 things. You ready? 1, the high. 2, the low. 3, where was it? 4, where is it? 5, what's the direction? You just take your finger, down, up, down, up, down, up. Good. It's bouncing off the bottom here, going to the upside. That is a possibility. Let's let's look a little closer to 30 days. That word's there somewhere. All right, here we go. It doesn't look good. The whole view changes dramatically when you go from 1 year to 90, then from 90 to 30. The 30 doesn't look as good as it did on the 90 because 30 days ago we're at 76. We jumped up to 77, drops down to 72, shoots up to hit 80, pulls back, now we're turning here. It might be going into a new trading range. Don't know. You got your bottom last Tuesday, and Wednesday was a little higher, and Friday was a little higher. We didn't have any trading on Thursday. So it is 2 days to the upside. Now, is that something you like? Well, I like 2 days to the upside. Well, allow me to retort. I told you, allow me to retort. This is not advice. This is not advice. This is just my opinion. You can say, thank you so much for your opinion. All right, so let's take a look at seasonality for Nike. Because Nike, well, they have been around for over 20 years, okay? They do consistently increase their dividends. Well, what do they look like at the end of the year? Well, we're at the end of the year right now. Seasonality chart is a whole year. January 1st December 31st. It's the whole year. The blue line is the movement this year. This is what it did this year, the blue line. The red line, well, that's 10 years of average movement. What has the company normally done? Well, look, in the beginning of the year, she slowly goes down the first quarter. Well, look at this year. Slowly went down in the first quarter. The second quarter usually goes flat. Well, look at this one. The second quarter went flat. Now, this one's just a little bit different because usually the third quarter she goes up. Well, this one, just around the Olympics, she dropped. All right, so what are we looking at in the fourth quarter? The fourth quarter, right here, to where we are now, nice upward trend. Let's like zoom in to the fourth quarter. Here we go. That's the fourth quarter. Look at that red line. Isn't that awesome for Nike? Where are we right now? Well, right here. Okay, we're going to go up a little bit more for another 2 weeks, dip down, and then finish off the year at a high. Well, that's normally what Nike does. Is it guaranteed? No, not guaranteed at all. Just because it did 10 years in a row doesn't mean, Ken, what's up? Doesn't mean it's going to do it again. It just means it's a possibility, a probability. It did it 10 years in a row, more than likely it will probably do it the same. Will it? Might it? Yeah, it might. Probably. Okay. So, that being said, the seasonality looks great. Okay, so she's jumping into a new training range. Seasonality looks good. So, let's actually see what a 79 covered call would look like. And why do I say 79? Well, the current price is $78.97. Well, the closest strike price, which is a stock option, hold on a second. I'm not used to talking so much, so the ginger and honey relaxes my vocal cords. All right, so $78.97. I'm going to look at the 79s. The 79s are paying 82 cents a share. Now, 82 cents a share is more than 1% of a $79 stock. So let's see what it sounds like and what it looks like. So we're going to change it from single, that means just the option, down to the covered call, which is the trading strategy. So the covered call, here we go. And we like the 79, there it is. So let's buy the 79. Let's just do one contract so you get an idea of what one contract looks like. Okay, so we're going to do one contract at the market, which means if I send this off to the broker, it's going to sit in the market maker's screen first thing in the morning. Okay, and if I have it at the market order, he's going to fill it instantaneously, which means I'm going to buy 100 shares of Nike and sell one covered call at the exact same time. That's 2 trades in one, means I only have to pay 1 commission. All right, so that being said, let's send this off to the races, and here's what it sounds like. You ready? Buy 1 covered call of the Nike stock 100s. That is the weekly. That means it's going to expire this week. 6 December 24. Well, the option expires on Friday, which means whoever buys the option from me has between tomorrow morning and Friday at 3:59 p.m. to make a decision. Shit, get off the pot. I'm sure you heard it before, okay? Do something, okay? The $79 call strike against the Nike stock at the market to open. That's the order, okay? That's the order right there. The profit is $100.50 on this one contract. So it's $100 per contract. Now, the thing about one contract is going to be $7,800. But let's see what the math looks like. Okay, so if my profit, clear that, is $100 and 50 cents. That's my profit. The cost of the trade, right here, see? The cost of the trade plus commissions and fees, $7,800.16. divided by $7,800.16. That gives me a grand total of 1.28%. Well, 1.28% is more than 1%. That's what we're looking for. Well, that's what I'm looking for. I'm looking for 1%. Now, here's the thing. Nike has consistently increased its dividends. Great. Nike has a dividend coming up. Great. Nike is actually rebounding off of a pullback from a high. So when the profit taking, it drops down, it hits a bottom, turns around, goes back up. That's what it's doing at the moment. So I like odds and probabilities in my favor. Let's get out of that. Let's get back into there, and let's go back to right there. Okay. So I have a few things going in my favor. Number one, Nike. We all know who they are. We all know what they do. They're currently in a rebound. Down, up, here's the high, down, stop here. Now she's going back up, entering into a new trading range. Is it possible? Yes, it is. But do you like the stock at this price? Wonderful, great. Now, it's giving me over 1%. It is Nike. I do know who they are. I have no problem with buying them and holding on to them. So, I'm writing Nike down for tomorrow. AG&C, we looked at that one. XRP. Nova. What the heck? No, I haven't looked at Nova in a long time. N-O-V-A. Yeah, no. Next on the list. Would you buy Nike now at 1.2% with a dividend not until January? Sure. Why not? What software? Jeff, it's not software. This is a trading platform called Thinkorswim. It is available through Charles Schwab. Charles Schwab is one of the big brokers. All right, so Nova, no. Reason why Nova is a no, monthly options. I don't like monthlies. The numbers just don't work for me. APAM we've already done. Hewlett Packard. Mark Dunn wants to take a look at Hewlett Packard. Hewlett Packard. HPQ. You're welcome, Jeff. HPQ. Here we go. Now, I do like Hewlett Packard. It is on my list. Let's take a look at the numbers. Now, first number I want to see is the high of the year. Well, that was last week, just about 40 bucks. The low of the year back here in April, right around 27.50. A year ago, we're at 28. I didn't get to see that. What was that question? What about IWN? Ken, what the heck is IWN? A year ago, we're at 28. We go channeled sideways for a while. Yeah, I got that. IWM. Okay. I've never heard of it, but we'll take a look. She channels sideways for a little bit, finds the bottom here, then shoots up the end of May to find the high in May right around 39.50. Drops back down, shoots back up, almost hits 40 a couple weeks ago. Now we're down here. I'd like to see what happened there. Bless you. Thank you, Ken. All right. What actually happened? Before we even do that, before we even look at the chart more, the price is 35.50. 35.47 to 35.50 is going for over 1%. Okay, fine. So the numbers work. So let's continue taking a look at the chart. Last 30 days. Interesting. Very interesting. Okay, 30 days ago, we're right here at 35, almost at 36. Jumps up, pulls back, jumps up. Here's the high right there, almost at 40. 2 days later, she gaps down. I love a gap down. Gaps have a tendency to fill. Not guaranteed to fill, but a tendency to fill. Get your high here, your bottom here. 1 day to the upside already. More than likely, we're going to have another update tomorrow. It is Hewlett Packard. You should know who they are. Hewlett Packard's been around for a while. They make computers, just like a lot of other computer companies. Nike's earnings are December 19th. Thank you there, Stephen. So anyway, I like Hewlett Packard. Let's see how does it usually move during this time of year. Usually, Hewlett Packard goes flat. All right, what does that mean? It means no big jump ups, no big jump down, just kind of going sideways. Not bad. Great for covered calls and spreads if you know how to do those, but not so good if you're looking for capital appreciation, which not what we're looking for. We're looking for the stock to stay steady where it is or go up. It goes three ways: up, down, or sideways. Nowhere. No. So 2 out of 3 ain't bad. That's Meatloaf. 2 out of 3 ain't bad. I want you, I need you, I love you. Oh, that's Elvis. Wrong one, sorry. All right, so Hewlett Packard is on my list. HPQ. Let's keep on keeping down. Okay, NHI we already did. Abelmal we already did. AGNC we already did. MSTI we already did. MPW, Jacklack. I like MPW. MPW. Let's go back to here. Turn this off. Go back here. Put in MPW. MPW. Woohoo! Now, just to let you know, see down here, I do have some MPW in this particular account. Ooh. The high of the year, we got double high. We got a bottom back in January. Okay, back December she's in 5, drops down, shoots up, pulls back, shoots up, pulls back. We're floating around right here. 440 to 450s are going for 9. Now I know 9 cents doesn't sound like a lot of money, but here's the thing. Listen closely. The premium is 9 cents a share. Well, the stock is only $4.42 a share. So 9 cents a share on a $4.40 stock, that's 2%. Do you understand what 2% a week is? Let's check it out. Let's actually see and take a deeper dive into this one. Let's move this way. A year ago, we're at $5. We dropped all the way down to a double bottom at $2.90. Then we have a double high at $6.56. Hits it once in the middle of May, and then hits it again in the middle of September. From there, okay, from the middle of September, look at this drop. She drops, goes sideways, drops again. Here's the bottom right there. Now she's going to the upside. You cannot say that's not going up from the bottom. Last 30 days, here we are. Changes the whole view, doesn't it? 30 days ago, 470. She drops, here's the bottom here, shoots back up, there's the high, back down, the new 30-day bottom, up, pull back, now she's going up. 2 days to the upside right there. That is a golden invitation for me. Not saying anything to you guys, but I like MPW, and I'm putting it on my list for tomorrow. Double jolly good. All right, CJ. MDT, Medtronics, was looking at 86 strike, but there was a bit of a spread from the bid and ask. So I was wondering if it meets the 1% for your based in the mids. Thanks. All right, CJ, sit tight. Let's take a gander of Medtronics, MDT. All right, so I like MPW. Okay, MDT is next. MDT, there we go. Medtronics. Interesting. First thing I always want to see, always, the first 5 things. High, low, was, is, what's the direction? Okay. Next, what's the numbers look like? 86, 84, I'll be looking at the 87s. 38 to 64. This is the part where we say in unison. You ready? 1, 2, 3. Hell no. Sorry, it's not 1%. Now, I like the company, I really do. But if I'm going to be investing my money into anything, and I like Medtronics, I do. I bought them many times in the past. But this week, it's a no. Because right now at 86, 84, the closest strike price, is going to be the 87. And the 87 is going between 38 cents a share to 64 cents a share. That's the spread between the two. Neither one of them is 1%. So it's going to be a no. Now, terribly sorry, but I do like MDT, but not this week. Not a no, definite no. Like MSTR, definite no. APAM, definite no. NHI, definite no. Okay? But MDT, not a definite no. It's a not this week, maybe next week. Okay? As long as the numbers change and I'm getting my 1%. Can I look at IWN? IWM. iShares? Hell no. All right, let's take a look at the iShares. I don't want to take a look at this. I want to take a look at the dividends. Nike's EXA's Tuesday covered call. Maybe get by. I want drop that. Yeah, it will. But Steven, here's the thing: either you like it or you don't. I don't pay attention to the earnings reports because I've seen positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. They make no rhyme or reason to me. And lately, I've seen, or I've witnessed, in my opinion, that the market maker over-exaggerates the effect of the earnings reports. Sorry. All right. What are we looking at? IWM. IWM. I can tell it's a no already, just by looking at the 4 dividends. Okay, so IWM has got dividends all over the place. Let's go back to 2000. All right, let's take a gander at the dividends. All right, IWM. 3 cents, 18 cents, 22 cents. Well, that's freaking awesome. First 3 dividends, high, higher, higher, great. 4th dividend, 10 cents. You cut it by 55%. Why would they cut the dividend 55%? Okay, so it goes to, from 22, goes to 10. 14, 15, 14, down. 6, that's more than half. Cut it. It cut more than half. 12, 13, 19, 8. Cut it in half again. 8, 12, 19, 12. Cut it. Cut it. No, hell no. I don't even have to go through the whole thing. If the company's not consistently profitable, it's a hell no. Okay? Sorry, dude. I'd like to be helpful and like to say, hey, it's a great pick. But in my opinion, it's not. Because if I'm giving you money to invest, to do something with whatever your plan is, if you're not consistently profitable, well, then I'm not going to give you my money. It's actually that simple. If you're not consistently profitable. Now, just because you say you're going to do well and then you don't, well, then it's my fault. Okay, if I look at a company, let's say Microsoft. Microsoft has increased its dividends for more than 25 consecutive years. Great. Higher, 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 higher. Every single dividend increases every single year. Okay, great. That's where I put my money. If next year they don't make a higher profit and they don't pay a higher dividend, well, then they're off my list. It's actually that simple. Seriously, it is. There's 9,753 companies, or is it 43? I don't know. Something like that. Let's find out the exact number, because I know someone's going to get pissed. There's always someone. People complain about a free freaking lunch. Okay. So we're over at FinViz. Now, I use FinViz. It's a financial visualization website. It allows me to check and see how many different companies there are. Okay. So they have changed yet again. Right here. Here's the number. 9,725 companies. So they went down a little bit. All right. AGNC. Jeff, we already looked at AGNC. It was a no for me this week. Now, I like it. Every once in a while, I buy it, but not this week. Okay, so 9,725 companies. All righty. What are we looking at next? Ivan, check the seasonality chart. See if you can get out of Nike. All right, Ivan, I'm not in Nike. Okay. NKE, here's Nike. Okay. Here's a seasonality chart right here. Okay, Nike has a tendency to go down in the first half of the year. And the second half of the year has a tendency to go up. Now, in the next couple of weeks, well, it's showing that Nike has a tendency to go up to the end of the year. See, here's where we are right here. Okay, look, goes up, a little bit of pullback, up, and finishes the year off at a high. Normally, is it guaranteed? No, it's not guaranteed. Nothing is guaranteed. How do I feel about meme coins? Monger, I don't do coins at all. Dividend stocks only. Demo. Demov. Okay. Demo, how are you today? NU, you saying that's Warren Buffett stock? Warren Buffett bought NU? Okay, well, we already took a look at it once. What was my consensus a few minutes ago? NU, okay. NU. No dividends. Okay, so even though Warren Buffett owns it, it has no dividends. No dividends, no thank you. Sorry. Nova, we already looked at. That was a no. Abelmal, we already looked at that one. Are you only talking about stocks with dividends? Jacob, absolutely. The name of the show is Dividend Stock Talk. If the company doesn't have dividends, no. No thank you. It's actually that simple. No dividends, no thank you. I don't look for capital appreciation. There's only two kinds of stocks. Ones that share their profits with dividends, and the others don't. Why would I want to invest in a company that doesn't share their profits? That's not what I'm looking for. Okay, what I'm looking for, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Weekly options on dividend stocks. That's it, two criteria. Weekly options on dividend stocks. Preferably dividend stocks with 20 years or more of increased dividends. That's the only place I want to put my money. It's boring, it's slow, it's monotonous, it's the same thing week after week after week after week. It amazes me how some people still hear from January of last year. There's a couple people still here from January of last year, and they come back every night. It amazes me. All right, NHI, no. ALB, no. MSTR, no. NHI, no. ALB, no. KHC, Omar Chavez, Heinz Kraft, KHC. Now, KHC is almost just like Coca-Cola and Pepsi. They are so big, they do not feel the need to give out good premiums. Let me show you. Right now, the price is $31.99. The closest strike price is going to be the 32. Look, 31 to 32. You're just going to get your 1%. That's about it. So let's take a look at the chart. The chart, the high is back in April. The bottom was last week. Okay, she went up, she went down, up, down, up, down. Now she's bouncing off of the bottom of the year. You're going to make the most money you can possibly make in the stock market buying low and selling high. It's the low of the year. It was just a couple weeks ago. So let's take a look. A year ago, we're at 35.19. The high of the year back in the end of April, 38.94. Well, she went down, she retraced. The bottom of the year, look at the last 90 days. Okay, here's the last 90 days. I'm still looking for the same five things. Same five things. The high, the low, where was it, where is it, what's the direction? Down, up, down, up. Okay, great. That's what she's doing. Got a question over here. Have you ever looked at the wheel strategy for options? Yeah, I have. I love it too. It's not the strategy I teach here. It's a little bit more complicated. Ken, we'll take a look at Ford. Okay, now the reason why I say that the wheel strategy is good, even though it is a good strategy, I don't teach it here. I only teach one strategy, only one. That is the covered call with with a good dividend stock company, because it is simple, it is safe, it is predictable, it is consistent. If you do it right, there's no way to lose. If you do it right, there's no way to lose. It was what I taught my daughter 15 years ago. Okay, she was 9 years old. She said, Daddy, can you teach me? So it had to be simple, safe, predictable, consistent, no way to lose. The 5 rules, simple. Never buy something you don't understand. Never sell at a loss. Make sure it's consistently up. Yeah, you're right. It makes sense. But I do like the wheel strategy. My theory, it's just a theory, okay? Here it is. Perfect one strategy. Perfect one strategy. When you get good at it, then introduce other strategies to it. If you're not okay with 50% a year using this one simple strategy that was created for a 9-year-old little girl, if you can't figure it out, if you're not okay with it, you're in the wrong place. I'm not looking for huge returns. Isn't the wheel going? Yeah, I like the wheel strategy. Really, I do. Let's get off of it. Okay? I do like it, but I'm not teaching it here. Okay? I will teach it on my morning trading group, and I teach other trading strategies there. Think of it this way. I'm showing you for free, no strings attached, a way to make 50% per year using good quality dividend stocks and one of the safest trading strategies there is, the covered call. I'm teaching you that for free. You don't need anything else, in my humble opinion. But I like that one, Wall Gator. I'm not sure if I agree with your strategy. You don't have to agree with my strategy. I'm not asking for your approval. I'm just saying it works for me, all right? And it works for me so nicely, I make about 50% or more every single year for the past 15 years. Now, I said I've been trading for 20, and I admit my first 5 years weren't really that great. But after my daughter asked me to come up with something for her specifically, well, 50% a year for 15 years is not that bad. I'm glad you like it. Some people like it, some people don't. 50% a year is not enough for some people. And for those people, I say, thanks for stopping by. This might not be for you. And it's not for everyone. I tell everybody that right off the bat. It is slow. It is boring. It is monotonous. It's the same stocks over and over and over again. PNC, Jeff? PNC. Well, I wrote it down. I'm not sure we'll be able to get to it because it's at 10 o'clock now. We got an hour and a half left. And I've got 5, 10, 15, 20, 23 stocks to look at. Most likely, we're not going to get to it. All right, so Wall Gator 369. Not sure if I agree with this strategy. You don't have to agree with it. You don't have to like it. Okay, Omar, we're still looking at KHC, Kraft Heinz Ketchup. Gotta love them. $31.99. The 32s are going for 31 cents. You're just going to get your one. You squeak right under there and get that 1%. Great. Let's take a look. The last 90 days. Okay, what does the last 30 days look like? What is it most likely going to happen in the last 30 days? We'll take a look. 30 days ago was a 30-day high, 34. She drops all the way down to 30.28. Shoots back up, and we have 2 down days in a row. So not quite 100% there, because your bottom's here. You can't argue with it. Seriously, you can't. Okay, that's the bottom. I get you a 3rd grader or a 2nd grader. Hey, where's the top? Oh, right there. Where's the bottom? Right there. You can't argue it. Top, bottom, bounces up. Okay, not quite there. What do we got over here on YouTube? Just had a question. Question. What's your strategy called? Doesn't have a name. Dividend capturing. Wait a minute. Yeah. Dividend capturing 2.0. Right. How about D? Ooh, I like D. So anyway, Omar, I do like Kraft Heinz. They have been in business for over 100 years. They are a dividend king, which means they have increased their dividends for more than 5 decades. That's 50 years of increased dividends every single year. More and more and more money. But here's the thing. Okay, she went up. Now this profit taking is coming back down, unfortunately. So if you keep your eye on it, and if she turns back 2 days to the upside, which might look at Wednesday might be the earliest to jump in, because where we are here, getting 2 days to the upside for it to go back up again. That's my opinion. I like 2 days to the upside. All right. Miglani wants to take a look at D. Dominion Energy. No, I don't like monthly options. The numbers just don't work for me. Sorry. I can't be done. No, I didn't think so. La la la. I gotta go with all these questions. What did I miss? MSTR, nope. Okay, SoFi, no. No dividend, no dividends, no thank you. NHI, no. KHC, we already looked at that, no. Jacob Green. Wallgator, just thinking the same thing. Hey, you don't need to agree with me, and I'm perfectly okay with that. Thank you, Universo. Okay, CA all day. Do you post trades, track actual performance? If so, what is my year to date? Oh, see, someone's always asking that question. Do I track? Okay, hold on. This is for, who's this one for? CA all day. Okay, CA all day. Here you go. The10minutetrader.com. Okay, this is all my social media. You go below that, 3 accounts. 1, 2, 3. Account number 1 is up over 84% for the year. Account number 2 up over 76% per year. Account number 3 is up over 30% per year, but account number 3 only started in July. Okay, underneath that, here's all the trades. Every single trade since the beginning of January. Do I track it? Let's go back to January, which would be week number 1. Here you go. Week 1, first quarter. Week 1, first quarter. There's 13 weeks in each quarter. So week number 1 of the first quarter looks the exact same as week number 1 of the second quarter, which coincidentally looks the exact same as week number 1 of the third quarter and week number 1 of the fourth quarter. I told you it's the same thing over and over and over again. Repetitive. All right. Macy's, General Motors, Ford, CVS. If you know how to read this, okay, here is the time when I bought them. Here is the type of the trade, buy, sell. Here's the quantity. Here is the stock symbol. Here is the date. Here's the strike price. Here's the purchase price. Here's the net debit, blah, blah, blah. That's that. Now, if you take a quick look, you'll also see week number 1 of 2024, I made 2.12% in this one account. And this account here, 2.99%. That's just a little bit under 3. CVS, General Motors, LUV is Southwest Airlines. Come on, you guys should know this. CMCSA, Comcast. F, Ford. Okay? Same thing. Every single week is listed. Look at 4.6, 2.9, 8.6, 3.9, 0.9. See, I don't make 1% every week. Do you like CSL? What the heck is CSL? I don't know what CSL is. CSL. All right, so CA all day. Yeah, I list all my trades all year round. Every single one. Now, I haven't listed last week's trades yet. Haven't got to it. So to answer your question, yes, I track. NHI, no. Omar, I have 100,000 in my trading account. Where do I start? Omar, I tell everybody start the exact same place. Paper trade. Get a virtual account and just paper trade. When you get good at it, you will know when to put real money into it. Now, I've been trading over 20 years. I still have a paper trading account. I do. Because I always come up with new trading strategies and I want to test them before I put real money into it. I actually have 6 accounts. 6 accounts. I share 3 of them with you guys. That's it. I got to draw the line somewhere. I share 3. Okay. It was a no on NU due to no dividend. That's correct. But it's on Warren Buffett's list for your information. Yeah, holy bad guys, I know that. BDB. What the heck is BDB? What was it? Okay, and BDB. I will have to take a look at it. Doge, no. What do I think about KHC? We already did that one. Realtor, have you looked at option chains? Okay, interesting. Jacob, how does investing in only dividends paying stocks balance your opportunity cost of new IPOs? Okay, Jacob, you're under the impression, okay, seriously, you're under the impression that I like IPOs. I don't. Okay? You have to decide what is right for you. Actually, you all do. Hold on. It's a dividend king. I used its strategy to make good money from it. DNB? Did you say DNB? Hold on a second. What was that one? DBD. I have no idea what that one is. All right. So, Jacob, as I was saying, I'm not looking for big moves, and I don't know how to express that to you. Everybody goes through phases in life. Okay, you go through your childhood, you go through your adolescence, you go through your preteens, you go through your teenage years, you go through your high school years, you go through your college years, you go through your working years, you go through your family, buying a house, making money, all that stuff. And then you get to retirement, your golden years. And believe it or not, which you're probably going to have a hard time with this, so argue all you want, or you can just admit it and say, oh, okay, that's what I got to look for. When you get to a certain point in your life, money no longer has the attraction that it does in your younger life. Okay, my greatest asset at this moment in time is my empty schedule. I can come and go and do whatever I want. Okay, I have a small amount of money put aside that makes me 1% every single week. That 1% every single week pays all my bills. Allows me to come and go as I please. Allows me to go to hang out at my mother's house, mow her lawn, trim her trees, do that honey-do list for my mom because she's all by herself. Then my kids are right down the street. I go over to their places. I like to mow my son's lawn. He could pay someone else to do it. He could do it himself. But I actually enjoy it. CJ, I know you only typically look at companies with weekly options. However, most of the stocks I've been screening don't have it. Do you look at them for the third week of the month? No, I don't. Because if you're off, even if it's a monthly, and you're looking at the very last week, because it'll be a week, no, because if you miss it and the stock goes down, that next option, 30 days out, which is 4 weeks away, may not have any value to it, and that happens a lot. So no, if it doesn't have weekly options, it's a no, because if you're wrong, it sucks holding on to something and not being able to get anything on it. Grace, how are you doing today on Instagram? All right, so where was I? So sorry about that, Jacob. Money doesn't have the attraction to me that it does have to you. I'm not looking for growth. I'm looking for cash flow. There's a huge difference. When you get to a certain point in your life, you feel compelled to share what you know. So what I have up here doesn't go in the ground. You know, I'm not going to be buried. I'm going to be cremated, so it's going to be up in smoke. So what I have up here, it's not going to go up in smoke. I'm actually doing this so hopefully my children and my grandchildren, my great-grandchildren will have videos to see how Papa G, that's me, made his money and how they can do it too. Because the stock market's been around for 400 years. 400 years. Okay, options have been around since the 1970s. Neither one is going any way. And if you can find a simple, safe, predictable, consistent way of making 50% per year, great. Do it. This is what I found. This works for me. NHI, steady gains, no good dividends. Okay, yeah, Mike, I get it. You like NHI. I get it. I'm not dense. I've seen you post it over and over again. It just doesn't work for me. Okay? KHC, we already did that one. Francis, what's going on with U.S. Steel? Well, let's take a look. U.S. Steel, the high of the year was back in last December. The bottom was in September. Shoots up. Look at this channel sideways, breaks out, make that bottom there. We're currently at 40.90. The closest one is going to be the 41. And the 41, holy shit, that's 5%. More than likely, they're going to have their earnings come up. Sometimes companies have a higher premium when the earnings are coming. So here's a very tough question for you. Let's take a look and see what you think about U.S. Steel. A year ago, 36.33. Big jump up to the $50 area. That's the high of the year, and that was back in mid-December of last year. She drops down and she stays in this trading range. What is that? Between 36 and 40. Okay, between 36 and 40, it just traded sideways all year long. I love it when a company does that. It allows me to get in, get out, get in, get out, get in, get out. Because that's all stock. Take a close look. Up, down, up, down, up, down, up, down, up, down. Stocks do not come to your house, take your dog for a walk. They don't wash the dishes, they don't take trash out. Stocks do absolutely nothing but go up and go down. They go up to get to a point where people who own it say, hell, I'm taking those profits before they disappear. When they do that, the stock drops. Drops down to a point where people like me say, holy shit, U.S. Steel at this price, I'm buying some. Stocks go up, stocks go down. They go up, they go down. They don't even come to your house. Make your bed, put those little chocolate candies on your pillows and tuck you in at night. No, they don't. They go up, they go down. That's it. If you're expecting more from a stock, you're delusional. Stocks go up, stocks go down. If you find a company you like, keep your eye on it and find the buying and selling opportunities that pop up every single week. Look at it. It went up, profit taking. It went down to a point down here. Okay, people buy it, it went up. People sell it, it went down. Up, down. That's all they do. We got a question over here. Do you look at the high yield stocks or do you not care about the yield when trading options like this? You're absolutely 100% correct. I don't care about the yield. The yield means absolutely nothing to me. I'm interested mainly the consistency of the profitability of the company. If the company is consistently profitable, that means every year, every quarter, they make more and more and more money. That's where I want to put my money. I'm not interested in IPOs. I'm not interested in meme coins. I'm not interested in cryptocurrency unless there is a consistent, predictable, safe way of making money from it. Yep, makes sense. Thanks for clarifying. Well, all right, I'm glad you appreciate it. Okay, Omar, we already talked about KHC. We're currently looking at U.S. Steel, so let's stay focused on U.S. Steel. The bottom of the year, 26.87. That was the beginning of September. Look at the last 90 days. Last 90 days. Up, down, up, down, up, down, up. Wait a second. Wait a second. Didn't I just say that? Stocks go up, stocks go down, stocks go up, stocks go down, stocks go up. Well, right now, it's in upward. Let's look at the last 30 days. Because the last 30 days gives me a really good idea of what's going to happen next. Here we go. Last 30 days. 30 days ago, we're at 39.50. She went down, she went up. She went down, now she's going up. You cannot mistake that for anything else. That's your 30-day high. That's your 30-day low. What usually happens at a 30-day low? Well, if there's no adverse information floating around in the ether saying this is going tank, this is doing that, no. If there's none of that crap going out, no bankruptcy whispering going around, well, it's just business as usual. Well, there's the bottom. You're going to make the money in the stock market buying low, selling high. You buy low, now it's going to the upside. Great. Well, if I jump in tomorrow morning, right, tomorrow morning, Monday morning, $40.90 is the current price. Argue all you want, that's the price that's right there. $40.90, the closest strike price, because I like the covered call, because it's simple, safe, easy, predictable, all kinds of stuff. We're actually going to do one right on this. We'll do a sample covered call on U.S. Steel. 1 second. $40.90, the current price. If I buy it tomorrow, I sell it to somebody else at 41. Okay, I get the 10 cents difference between the 40.90 and the 41. That's one. And then $2.39 to own U.S. Steel. They've been around for over 100 years. This is not a week, a month, a year, 5 years, 10 years. No. This is 100 years. What has U.S. Steel seen in 100 years? Well, World War I, World War II, Korea, Vietnam, the stock market crash at 29, the Great Depression, all the crap happening over in the Gulf, you know, in the Middle East, all those wars going on, the pandemic, the dot-com bust, the financial crisis, yet this company is still increasing their dividends. Go figure. Better question you should be asking yourself, why isn't U.S. Steel on your list? That's a better question. All right, so I like it at 41. Let's get out of here. Let's do a covered call on U.S. Steel at 41. And just do one contract, so you know whether you can afford to do 1, 2, 10, 20, 30, whatever. One contract at the market, at the open. Here's Johnny. Buy one covered call of X 100s. That is the weekly. Just to let you know, it's the weekly option. December 6, 24. That's this coming Friday. That means the option is going to expire at 3:59 p.m. Friday afternoon. So if you're going to buy an option, do something before 3:59. I don't buy, I sell. Reason being, 80% of all options expire worthless. So why do I want to buy them? I want to be the seller. I want to buy the stock, sell the option. Absolute worst case scenario, the stock drops. Well, I still own it. I get a dividend every 90 days, and they increase every single year. U.S. Steel is on my list because they increase their dividends every single year. That's why they're on my list. All right. The $41 call strike against the X, which is the U.S. Steel, at the market to open. Okay, right here, take a look at this. My break even price, $38.26. Well, the stock is currently at $40.90 in an uptrend. So it's uptrending. The trend is your friend right up to the end. So if as it's going up, great. I don't want to buy it as it's going down. I want to buy it as it's going up. So we isolated it on the chart showing that it's going up. Now, break even is $38.26. Anything over $38.26, I'm still profiting. So what does that mean? Well, currently at $40.90, if it goes up, I make my money. If it stays the same, I make my money. The stock can even come down all the way, where is it? $38.26. It can come down to $38.26, and I'm still making money. So, up, make, sideways, down just a little bit. I'm still good. All right, so profit on this one, holy shit, look at that. $273.50 per contract. So one contract's $273. Two contracts, well, it's over $500. You figure it out. All right, let's get my calculator out. Clear this old stuff. The maximum profit. Now, remember when I said I like simple, safe, predictable, and consistent? When I say predictable, that means I know what I'm making before I even do the trade. So the trade right there is telling me that's what I'm going to make. If the stock stays above 41 come Friday, this is what I'm making. I know that ahead of time. So the question I ask myself is, does it make, question number one, does it make sense? Question number two, do I like U.S. Steel? Question number three, do I like U.S. Steel at that price, $40.90 per share? Question number four, can I picture myself owning U.S. Steel for the rest of my life and collecting their dividend every 90 days? And possibly doing a covered call every single week. Because if I can get cash flow from U.S. Steel every single week, why the hell wouldn't I? It's not do I like it or should I buy it? The answer should be, why isn't it on my list? Why isn't it in my calendar to look at every time they have a dividend? Because I like the idea of capturing the dividend and getting a nice premium for it. I like all that. All right, so let's actually do some math. $273.50 is the profit. $273.50 is the maximum profit for this particular trade. Now, what is the trade going to cost me? Cost of the trade including commissions. It's right there. It's costing me $3,800 per contract, which means I could buy 100 shares. That's 3,800 bucks. Okay, 3,800 bucks. I own 100 shares of US Steel. I am entitled to 100 of those little tiny dividends, whatever it is. That's just one contract. If I get 2 contracts, that's 200 little dividends. Okay, if I own 500 contracts, that's 500 little dividends. It's a nice return every single year. Okay, so anyway, I'm going to take my profit, 273.50, divided by my purchase price, 38.27. 38.27 gives me a grand total of 7.1% per week. I'm actually going to put that one down. Circle it. Oh, wait a minute. Shit, it's already circled for tomorrow. I put 2 little stars next to it because that would be my number 1 trade. All right, so that's US Steel. I like US Steel. It's on my list. It's been on my list for decades. Delete that. Let's go back to where we were. Back to here. Back to the beginning. Voila. Back to where we are. So that's what's going on with US Steel. Hopefully that worked for you, Francis. Let's keep on moving. Omar Chavez, I already told you about KHC. Michael, you already asked me NHI. I get it. You like it. Wonderful. What about MSTR? No dividends. No thank you. Okay, we don't trade monthly options, weekly only. He will say this 100%. Yeah, that's all I do. I mean, think about, ask yourself this question. Okay, I grew up with this mantra. I don't know if you know what a mantra is, saying, motto, whatever. If it ain't broke, don't fix it. If I consistently get 1% a week, I know it's kind of boring, kind of slow for some of you people, but it's 50% per year. How often do you get 50% per year on your returns? It only takes me 15, 20 minutes a day. It used to take me 5 or 10, but now I am sharing it with more people and I answer questions, so it takes me a little bit longer. Guidance, how you doing? So it makes sense to me. This is what I do. I'm just inviting you to watch what I'm doing and I'm answering questions from you. I'm not suggesting any of you do it. If it makes sense, fine. Do your research. Never blindly listen to anybody online. Okay? Certain people, you want to talk to me? Seriously, you want to talk to me? DM me with your phone number. I'll give you a call. I say that every night. And sometimes 1 or 2 people throw me their number. I'll call them. And I think, holy shit, I didn't think you were going to call. Yeah, I do. You can actually put it in here in the chat. Does he actually call? Yes, I do. All right. Guidance, how you doing? GRNY. Greg, I'm going to take a look at it, but I can tell you right now, it's probably going to be a no, because I've been doing this so long, I know right off the top of my head who's who. No. See that, GRNY? No. Monthly, don't do it, don't care. What's your opinion of Bitcoin? Scraw Zero, I love the idea of Bitcoin. Really, I do. I love the idea of cryptocurrency. I do not trade it because there is no way at this time to get a consistent, safe, predictable weekly income from any cryptocurrency without having to sit in front of your computer. And I've already told you, I'm perfectly fine with my life. I have no desire to sit and watch. Greg, GRNY by Tom Lee and Funstrat. Okay. It's a monthly optionable stock. I don't do monthlies because the numbers just don't work. Okay, Greg, and I hope you understand that, and I hope you can appreciate my honesty. I don't do them because the numbers don't work for me. I've got nothing against the company, nothing against Tom Lee. It's just the numbers don't work for me. What about special dividends like PBR? PBR's a no, dude. There's a reason why they're giving special dividends. They're trying to suck you into buying their crap. That's just my opinion. Okay, money, T-Money. We already looked at Walmart. We already said no. Reason being, Walmart's at an all-time high. No, thank you. I looked at your TOS video from long ago. Definitely needs fresh reader. KG, you're absolutely right. Okay, I've been doing this for a long time. The videos I did 15 years ago probably do need to be traded again. Do you trade breakouts? No, I do not. Jack Lack. I think MPW dividends have been dropping. Do you still like to get into it if the numbers and the charts look good? Yes, I do. I'm a numbers and charts kind of guy. Every once in a while. Yeah, so he is bringing up a valid point. Okay, MPW did cut their dividends, but they are consistently profitable for what I am doing. Okay, yeah, every once in a while I will cut some slack on certain companies, and they have to be good performers. All right, so let's keep on going. Karina, half the PBR dividend is to pay the government their income. Could very well be. Did you do General Dynamics yet? No, we did not. Let's take a look at it. General Dynamics, GD. Okay, so here's General Dynamics. There's the high of the year. Here's the low of the year a year ago. Nice upward move. What happened here? Look at that nice upward move from 245 last year to 315. Now a big drop to 284. I want to see what's going on there. Because a big drop like that, see, as a steady growth, you get a big drop like this. There's your profit taken, okay? And then you get right here for new accumulations and it goes back up again. Well, let's take a good look at it. Before we do, the 284.50s, we'll be looking at the 285s, and we're not even going to waste our time. Okay? Now, even though the chart looks interesting, especially right here, I'm not going to waste my time with it because look at the numbers. The numbers aren't giving me 1%. There are so many other companies that will give me 1%. Why would I look at something that doesn't? It's a quick look. Okay, here's the chart. Great, interesting. High, low, all that kind of nice, neat stuff. And this right here looks very exciting. However, once I take a look, it takes 3 seconds to look at that. High, low, was, is, where's it going? That's easy. What's the numbers? 284.50. Well, the closest strike price is going to be 285. The 285 is paying 130. No, thank you. Sorry, that quick. No, thank you. Again, Greg, GRNY. No, sorry. D, we already looked at D. Didn't we already look at D? Dominion Energy, yeah, that's a monthly. That's a no. SNU, no. ALB, no. Walmart, no. Purple, Ryan, what the heck is purple? PURPLE. Purple Tech Biotech. Yeah. That's a no, dude. Monthly. Francis, we already looked at X. It was a yes. LEDS. LEDS. No options, no thank you. What about 9, NINE? No, thank you. NGNC. What the heck is NGNC? NGNC. No such thing. All right. Miglani. D. Dominion Energy. We already looked at it. It's a monthly option. It's a no. What stock is this? Well, it's AT&T at the moment. Nike, we already looked at. Tyrese. What's happening, Tyrese? We already looked at Nike. Purple. Hims. No. No dividends. No thank you. Omar. I'm holding Nike. Okay. I agree with. Disney. Okay. Square. No. RBLX. No. And recently added KHC. No, I like KHC, but the numbers just don't work. Bandit, MDT, we already looked at that one. Patrick, YOU. What the heck is YOU? Yeah, no. SOXL, don't even need to look. That's a no. XRP, Eric, you don't listen. XRP, look, 86 is in the house. Good, 86, I can use your help. I got to filter out some of these people here. XRP, no. It's not a dividend stock. It's a no. Thanks, Kevin. Patrick, we already looked at you. No. Omar, we already said all that. I agree with 2 of them. 2 out of 5, Omar. Okay. S'mores. Has been a while since I seen you, buddy. How about ELF? Okay. ELF. Interesting. 129 bucks. The 129 is going for 450. Interesting. Let's take a look at how consistent is ELF with their dividends. Are they consistently profitable? Sorry, dude. No dividends, no thank you. So S'mores has an interesting question for you. You come to a trading show, dividend stock talk, dividend investing for weekly cash flow. You asked me to take a look at ELF, ELF. It has no dividends. Why would you do that? No dividends, no thank you. It's just plain and simple. Dividend, stock talk. Dividend investing for weekly cash flow. No dividends, why are we even looking at it? Manny, thank you. Rudy, CHE. What the heck is CHD? CHD. Church and Dwight. Interesting. No. I wish I could see the numbers you're reading there. Okay, Alex. Alex, you've been here for a while. I always tell every single night, Alex, the screen behind me with these little tiny numbers is live on YouTube. You can actually go in the link in my bio and go to the10minutetrader.com and go to my social media links. Or you can go right to the 10-Minute Trader on YouTube. Go to YouTube, search out the10minutetrader.com on YouTube, and you will see. I have 2 lives currently at this moment in time. Let's go quickly. I'm going to show you where are they right there. And before it changes, right, the YouTube channel. Okay, the 10-Minute Trader, live right there. See 2 of them right there? Okay, there's me standing in front of the screen, and there is just the screen right there. And before it changes. Okay, you ready? I just said that 2 seconds ago. Okay, the 10-Minute Trader, live right there. See right there? Okay, there's me standing in front of the screen, and there is just the screen right there. And before it changes. Okay, you ready? I just said that 2 seconds ago. See? It's a little bit of delay. I got to get out of that. All right, I got to get out of that because it'll give me a bad echo. Right here we are, right here. Okay. All right. Not clearer here on YouTube. Damn, there's a second channel on YouTube. CJ, yes, there's 2 channels on YouTube. One, me standing in front of the screen, and one with me in the top part of the screen up here. So that way you can see all the numbers. Because you can't see these numbers on a phone. You can't see these numbers on an iPad. That's why it's on live on YouTube. So you can actually sit in your nice comfortable chair in the living room on your big 80-inch TV screen, and you can see the numbers better. All right. Jack Lack, I like MPW2. I got excited and jumped the gun early, got in on Friday. Jack Lack, that happens. Okay, one thing, Jack Lack, to be 100% honest with you, okay, after reading that one sentence, you really need to learn patience. The stock market has been around for 400 years. Options have been around since the 1970s. That's 50 years. Okay, we ain't going anywhere. Take your time, be methodical, and make sure you are okay with what's going on. Are you buying a stock, you're catching the dividend, or you're getting the premium, one or the other? What do you like about Nike? I like Nike. We looked at it a little while ago. Zim, no dividends, no thank you. Ooh, look at this, GILD. Haven't looked at that for a while. I haven't said no to this one in a while. Okay. Gilead. Oh, is that Gilead? Is that Gilead or Gilead? I don't know. Well, Gilead, interesting. Let's go back to here. GILD into Yahoo Finance. Now, I like Yahoo Finance because it gives me the information that I'm looking for. Okay, so Gilead, 24, 23, 22, 21. Yeah. Okay. Now, it's off to a good start. Okay? Jason, it's off to a good start. Gilead, they have dividends from 2015. So 2015 to 2024 is only 9 years. Now, if you like 9 years, good, perfect. Look, It goes from 43 to 47, 52 to 57, 63, 68, 71, 73, 75, 77. Consistently going up. That's great. It's awesome. But it's only 9 years. I want 20. So Gilead would make my list in about another 10 years. I might let squeeze by with 15, but definitely not 9. Sorry. 86, that's funny. But wait, it gets worse. GSY.to. What the heck is that? It's never, ever a good thing when I say, what the heck is that? GSY.to. Not there, dude. Unwise, how are you doing? Miglani, I want to see D. Dude, Miglani, I showed you D twice. What's that, Dominion Energy? It's a monthly, it's a no. Ooh, Black Eyed Joe, Home Depot. Love me some Home Depot. Over 100 years old. Consistently increased their dividends for more than 5 decades. You can't go wrong with Home Depot. Woo, I actually have some Home Depot. Now, the high, just recently, 440. The low, a year ago, 310. So it goes from 310 to 440 in 1 year. Well, that's nice. What happened in between? Well, she went up, she went down, she went up, she went down, she went up. Here's where we are right now. Does it make sense to jump in? No, it don't. Now, doesn't mean I don't like it. I like Home Depot. But look where they are. You get the high of the year on Tuesday. Means usually, not always, but usually profit taking. Means she's going to come down. Now, I do own some Home Depot. What about Nelly long term? Why is that always saying Nelly long term? Long term to me is 30 days. Is that your idea of David? David Landry. Is your idea of long term 30 days? Because that's my idea of long term. Okay? But Nelly is on the list. NLY. All right? Here's the high, here's the low. Look at what it's done. Basically channeled the whole year, staying between 18 and 20. That's it. 1995 that we're currently at right now, the closest one's going to be the 20. It's going for 10 cents. No, dude, sorry. Okay, it is on my list, but the numbers usually just never work. No matter what the chart is telling me, the 1995s, it's going for 10 cents a share. That's 0.5%. 0.5% for the year, that's like 26%. Okay, well, sorry, 0.5% per week is 26% per year. If you're okay with it, fine. It just doesn't work for me. Too many companies out there willing to give me a full 1% or more. What are your dividend stocks? Unwise. What a lovely question. Let's take a gander. Let's take a gander at some of them. I'm just going to give you a gander at some of the ones that I like. Not all of them. Just some. You ready? Hope you got a pencil and piece of paper. Here we go. I'm going to go really quick. Kinder Morgan, Northwest National. Saying, what the heck is this? Wrong freaking list. That's not my right list. That's a different company. That's a different list. Oh boy. Okay, this one sounds a little bit better. Okay, Siri, Ford, Apple, Wells Fargo, IBM, PPG, Visa, ExxonMobil, Emerson Electric, Kroger, RTX, 3M, Microsoft, Advanced Micro Divisions. No, Archer Daniels, Midland, Target, Aflac, UPS, Chevron, Walgreens, Johnson & Johnson, Kraft, Coca-Cola. Those are some of them. Now, I have about 300 on my list. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. And just for the fun of it, runner up, let's have Warren Buffett's list. Why not? 5 lists right there. Should give you about 300 companies that have increased for more than 2 decades. All right, thank you for sharing. You're welcome, Reginald. How are you doing today? Rudy, we are looking at CHD. It's a no. Is your my daughter a millionaire now? No, I'm assuming you don't have a daughter. Okay, at 9 years old, she's all excited. At 13, she wanted nothing to do with it. Boys, boys, boys. Yeah, no. So she has no interest in money either. She She grooms dogs. Go figure. My children, one's a bartender, the other one's a cook. My daughter, she does dogs. She's happy. Okay, she's not interested in money. And strange enough, you know, it's okay for some people. Works for you and a lot of others. Thank you, Banker Gnome. You're new here. I'm good with names. Banker Gnome. Never seen that one before, but welcome to the show. 86. It's very important to be helpful and effective. Uh-oh, I missed a bunch. Missed a bunch of questions. All right, here we go. It's very important. Yep, gotta love it. CHD, we're like, ooh, CORZ. C-O-R-Z. What the heck is that? C-O-R-Z. Okay, it has weekly options. Never heard of it before. So let's check and see how well they pay their dividends. C-O-R-Z. That's probably why I never heard of it. There are no dividends in the selected time period. Sorry, EC Betty. Okay. Jose, Applied Materials, over 1%. Didn't we already look at Applied Materials a little while ago? AMAT. Yeah. Okay, so here's Applied Materials, dude. Last 30 days. Up, down, big drop. That's probably going to fill. Up, down, one day to the upside. Yeah, it's not there yet. If you like Applied Materials, 174, the 175s are going for 296. Okay, interesting. I would like a couple more days to the upside for Applied Materials. And I do like Applied Materials. Okay. What do they usually do this time of year? This time of year, they basically do nothing. Just sideways. Or very slightly to the upside. So yeah, I like Applied Materials. We'll put that on the list for next week. Okay. Next, ooh, PNC is at a high of the year. That's no. Oh, somebody looked at PNC. PNC. Hell no. Sorry, I don't know who came up with PNC. No. Okay, don't get me wrong. PNC is on my list. It is one that I take into consideration once in a while. However, at this moment in time, it's at the high. Once she comes back down, I'm thinking 2 weeks, maybe 3. Look how high it is. PNC. All right, so PNC's on the list for a couple of weeks. All right. Thoughts on Ben Felix's video on dividend investing? Jax0614. I have no idea who Ben Felix is. Sorry. Okay, Jose, I saw that word. XRP. Thoughts? No dividends, no thank you. All right, what do you do when the stock has a large move against you and the premium at the strike price is 2? Okay. All right. Let me see if I can answer this question diplomatically. Okay, user 22335768478662. Let's call you Alfred. All right, Alfred. What happens when the stock moves the opposite direction? Well, it depends which direction it moves. If I buy a stock, let's take a look at PNC. If I buy it at 218 and I sell somebody the rights to buy it from me at 218 and she jumps up to 230, nothing really happens. That person takes the stock away from me at 218. I collect my 1% and I'm good to go. Now let's say it goes the other direction. If I buy it at 218, I sell somebody the rights to buy it from me at 218 and the stock drops down to, let's say, 200. What happens? Well, the option that I sold against it at 218, I get my 1%, great, fine. Now the stock's at 200, but my purchase price is 218. So I'm not going to be looking to sell options at 218 because they're probably not going to be worth anything. But at 200, which is at the money, that's probably where all the premium's going to be. But I don't want to sell at 200 because there's a chance that if it stays where it is or goes up a little bit, I could be called out and I can lose my stocks at 200 when I bought them at 218. So I go 3 to 5 strikes out of the money. So if it's at 200, maybe I'll sell the 210s or the 207s or the 208s. I want to be far enough away from the current price so that I'm not selling at a lower price. But then again, I don't want to not sell an option every single week, because even if I hold on to it, wait for it to recover, because that's all stocks do, they go down, they go up, they go down, they go up, they go down, they go up. Well, eventually it's going to come down. Now, as it goes up, down, up, down, up, down, I will continue to hold and continue to sell option premiums against the position until it gets back to the level in which I bought it at, and I make my profit off of it. Simple. I just hold on to it and I keep selling covered calls against it, but further out, so I'm not risking losing money. Do you think the gas stocks are going to fall? The Roach, really don't know. I take it 1 week at a time. So tomorrow is a new week. I'll take a look at the positions tomorrow to figure out what I want to jump in tomorrow. Now, this week, holy shit, I sold a bunch, which means I got $118,000 I got to spend in this account tomorrow. And this account here, I got 118. That can't be right. 118 in both? Okay. Well, I got a shitload of money I got to spend tomorrow. Is what it is. Stocks go up, they go down. I'll buy a position, I'll sell an option against it. If I get called out, great. Now I got to buy something else. So apparently, I got 118,000 I'm going to spend tomorrow. So I'll probably pick up 3 companies tomorrow in one account and then 3 in another. So that's 6 altogether. Sometimes I do it in the same account, but that's it. I take a look on Monday, what do I have to work with? So I got 118 I got to spend. All right, great. What am I going to buy? I'll probably get 3 positions. That's about it. Because I already have okay, I got rid of my Apple, I got rid of my Macy's, and I got rid of my Riley. Okay. So the other ones, I'll just have to figure those out and go from there. Right? I'll probably most likely jump into Apple again. I'll probably jump into Macy's again. And I'll probably jump into, what was that last one? Riley. I will probably jump into Riley again. Well, because I like them and they work for me. It all depends on where is the stock price at the moment. Is it in an upward trend? Is it in a downward trend? If it's in an upward trend, what's the price? What's the profit that I'm bringing in? It's the same stocks every week, over and over and over again. I will look at Apple every single week and look for opportunities. Actually, let's pull it up right now. Apple. AAPL. It's at 237. More than likely, I'm probably not going to buy it because it's too high. But look what it's been doing for the past couple of months. Basically just channeling between 220 and 235, just going sideways. Well, great. I will take a look at it. I'll see what the numbers look like. This is not my only trading strategy, but this is the only trading strategy I give away for free. This one here, the one I'm teaching you now. And it averages 50% per year. If that's not enough for you, I really can't help you out. All right, I'm not going to give you all my golden nuggets. If you can't perfect this one, then you don't deserve the other ones. That's just the way I look at it. I don't know. Anyway, gas stocks, I don't look at it that way. What tools should we use for starters? All right, Whale, you're new here. I'm good with names, and I recognize names when they pop up often, and you're new. Nothing wrong with that. Okay. Now, I use a mobile app called Robinhood in one of my accounts. Okay, most of my other accounts are with Think or Swim on the web, and that's through Charles Schwab. Okay, I'm not suggesting anything. I don't make any money on either one of those whatsoever. Okay, But I have been using this one for over 20 years because it has everything in it that I want. All right, if you were to start over again, what stocks would you choose? Brandy, how are you today? Well, Brandy, it's always going to come down to the exact same questions. Okay? Where am I when I'm starting over again? What assets do I have that I'm starting over with? And I'm making the assumption that you're thinking I'm going back to work again. Ugh, I shudder the thought. I could. You know, I'm only 60. I'm still pretty healthy. I could go back to work if I wanted to, but I'm kind of enjoying my life at the moment. Alex, don't push the wrong button. I've pushed the wrong button many times. What stock we talking about? We're talking about Apple at the moment. CME, I think, is USS. CME. CME Group. No. Sorry, kiddo. CME, two things. It's at the high of the year. Nope, I don't buy at the high of the year. And it's a monthly. I don't do monthlies because monthlies just don't pay the same. Plaz, OPTT. Never heard of it. OPTT. That's a no. Imagine that. What does the 10-year seasonality of X look like this week? What is that? Jaber? Okay. Saber? I don't know. X? US Steel? Well, look at that. Okay, we're here. Okay, this is the blue dot. This is where we are right now. Okay, if you can see the red line, that is a 10-year average movement for US Steel. It goes up very nicely towards the end of the year. Win. Ooh, the person's looking at Win. WYNN. Now, I think I lost money on Win this year. I think I did. WYNN. Interesting position. Let's take a quick gander. The high of the year, the low of the year. Where was it? Where is it? Look at the movement. Up, down, up, down, up. 94.60. The 95 is going for 145. That's more than 1.5%. Okay. Gee, if you were my son, how would you recommend he start learning? Oh, options, calls, etc., all foreign to me. Gee, my suggestion would be find something that interests you. Okay? Now, when I say my children are in an interesting situation, because everybody goes through phases in life. You're first in your childhood, money doesn't mean anything to you. You just want to have fun, you want everything. Your adolescence, you're a little bit older, you understand that if you do something, you can get a weekly allowance, which means if you rake the yard, take out the trash, make your bed, clean the room, stuff like that, take the dog for a walk, stuff like that, you'll get an allowance. You get rewarded for good behavior, same thing. Okay, high school, you learn the value of money because you want this, you want that, you want to impress your friends, that kind of stuff. You learn the value of work. That's where you get your work ethics when you're in high school. Okay, or in your adolescence. Okay, you work, you get rewarded. You do something, you get rewarded. Okay, now as you get older, money has more meaning to you. Okay, now my children are now at the point where they both my sons have bought houses, so they're at the point where they're realizing the free ride is long over. Okay, they are responsible for the electric bill. They are responsible for the groceries. They are responsible for the lawn. It's a slow process. Once they learn, okay, wait a minute, I'm putting 40 hours in, I'm getting this, this, and this. Okay, great. Well, to make a long story short, my children, my boys, because they're in their 30s. Now my daughter, she's in her 20s. She's still in that girl method thing, girly boys. Yeah, anyway. She's a different story. So my boys are getting ready. They're seeing the realization that, that profits are better than wages. So they're just getting on board. Now, I have one son I can push, and he sees it. The other son, I can't push him. The more I push, the more he pulls away. So him, I just leave hints, subtle hints here, subtle hints there. And he's slowly catching on. So I'm thinking maybe sometime this year that, I took my son on a very first private jet ride. He's never been on a private jet before. He took his first one. It's like, I think I could get used to this. So, wow, you ain't going to get it by being a bartender. So he's kind of catching the hint. He kind of wants to learn, and he kind of wants to do more stuff. Great. I hope he catches on. Really do. My other son, he sees it's happening. Okay, he's watching from the background. And he every once in a while, he says, Dad, I appreciate you not pushing me, but I want to learn a little bit more. So I can only give him a little bit at a time. So everyone learns differently. Okay? So I would tell you is find something that intrigues you. Okay? And the number one question you should always ask yourself, does it make sense? Never invest your money into a company that's not consistently profitable. Because at some point, Coach Joel, how are you? Nice of you to show up, buddy. Nice to see you. Nice to see you're okay. At some point in time, you are going to retire. The money that you have set aside for your retirement. Now, both of my boys are in their 30s. They got no clue what retirement even means. They've seen their they don't really remember their grandfather because, he started late. But for me, they see me retired and they see me just going wherever I want and doing whatever I want, not really caring about money because I have enough so I can able to do that. And they're getting kind of interested in how I do it. So they want to know. So I got to feed each one, all three of the kids, differently because this one consumes differently, this one consumes differently. And my daughter, she's still searching for that man. She thinks she found him, the one that she wants to spend her rest of her life with. Good, great, wonderful. Well, they have a plan. And their plan doesn't really include money at the moment. Now, she's the one who I created the 10-minute trader strategy for when she was 9. So 9, 10, 11, 12, it was great. 13, it's like, boys, he's so cute. The dress is so nice. And then everything just changed. And then money no longer meant anything other than the ATM, So, yeah, if you were my child, I appreciate that. But here's the thing. Learn slowly, one step at a time. Find out what you want. Okay, what do you want out of life? Do you want to be a doctor? Do you want to be a lawyer? Do you want to be a fireman? Do you want to be a policeman? What do you want to do? Okay, and then always keep in the back of your mind, at some point in time, you are going to retire. And there's only 3 options. 3, that's it. Don't let anyone other fool you. There's only 3 options. Option number 1, you can retire when they tell you to. That means you're too damn old. That's called aging out. You age out, you're too old to work, you cannot do this anymore. This is why you don't see, quarterbacks that are 50, 60 years old. No, they're just too damn old. Okay, it's not prejudicial whatsoever. Okay, I've been playing soccer since my high school days. I still play soccer and I'm 60 years old. It takes me 3 days to recover from playing one day, one game, 1 hour. Yeah, I'm not in the shape that I used to be. That's something you have to wrap your head around. Eventually, you are going to retire. You're going to age out. Or, number 2, you can walk out. What does walk out mean? Walk out means you have enough money coming in from your investments that you never have to work again if you don't want to. Some people enjoy working. I enjoy working. I actually work for free nowadays. But I'm working on my children's houses and I'm working on my mother's houses and I'm doing my own little projects. I actually have a project that I'm working on, solar electric boats. So I'm creating these little pod drives so I can actually ride around for free. Because I live in the Sunshine State most of the time. Sunshine State, I want to go take a boat out for a ride. But I'm frugal as hell. I don't want to pay $200 or $300 for gas every time I go out. If the sun is shining, let's just go. Solar electric, it's freaking cool. Sun is shining, we're cruising for free. Now, my boat doesn't go fast, but I'm not water skiing anymore. Nobody water skis off of a 40-foot yacht. They don't. Well, some people do. Freaking idiots. But that's okay. So anyway, let's keep on going. So anyway, G, take your time. Learn the concepts. Figure out where you want to. Oh, wait a minute. I forgot the third way to retire. 1, age out. Too old to work. 2, I got enough money. I don't need you. You can take this job and shove it type scenario. 3, the third option. You can toe tag your way out. I know lots of people who died at work, died on their way to work, okay? I actually have one kid I went to high school with. He was actually a victim of a postal scenario. Somebody goes in, takes a shotgun, starts shooting everyone. Yep, my friend Mike. I remember Mike because Mike didn't like hot dogs in elementary school. He always gave me his. He was a nice kid. He was. Didn't deserve what he got. Okay, Stephen, if you're looking at more than the stocks with upcoming dividends, how do you choose from a list of 300s which to look at? Stephen, that's an excellent question. That's what we're doing here. When I say, now I don't know how many people actually pay attention to this. When I say, oh, this stock looks good, I bet you it'll look really great in a week. I write them down. And every week, 7 days in a row, 2.5 hours every single night, I'm here looking at stocks. And when I say, oh, this looks great, I'm going to write this down for next week. And then next week, I will look at it. If everything looks good, I'll buy it. See, the person said win looks good, and that's what we're looking at right now. Win. 94.38. Well, currently the 95s are going for 145. Well, great. Look at the option. Look at the movement. Okay? Your highs here, your lows there. Last 90 days looks something like this. She shoots up, pulls back. Now she's going back up again. 30 days. Here you go. Check it out. Your 30-day high right here. Your 30-day bottom right there. Nice upward move. Now you ask yourself, do you like win? Well, what does win normally do this time of year? Well, normally, seasonality right there. There we go. The last part of the year, kind of choppy, but still towards the upside. That's how I look. Win does look good for next week, so I will take a look at it tomorrow. Now, I'm only buying 3 new positions tomorrow, so I got maybe 20 companies to look at just to pick out 2. All right. XRP thoughts? No. VFC? No. No nickname. What's happening? About time you get here. Ooh, can you check out ZIL? Z-I-L. What the heck is Z-I-L? Now, usually, who suggested that one? Okay, no name. Okay. Z-I-L, usually, when I say, what the hell is that? It's usually a no. All right, it's a ZIL. There is no thing there. ECL, DPZ care. What the hell is that? Dipshit care? ECL. ECL. No. Ecolab. Okay? It's a monthly. I don't do monthlies. The numbers just don't work. Oracle. Parka, how are you doing? Nice to see you there, brother. ORCL. Oracle. I like Oracle. Yeah, just like give me a little creep. Ooh, Bo wants to look at the bond. Hold on, we'll take a look at it. We got, 15 minutes left to go? Oracle. The high, the low. Look at that movement. Kind of choppy. Look at that. Up, down, gap up. Up, down, gap up. Up, down, gap up. Up, down, gap up. All right. Well, last 30 days looks a little like this. Sorry, Parker. Take a look. 30 days ago, we're at 174. We dropped down to 168. Shoot up, pull back, shoot up. Here's your high, 196. Now she's coming to the downside. Look at this right here. She's starting to change direction again. So it is a possibility for maybe sometime next week. Okay, the 185s are going for 220. That's well over 1.5%. 1.5% is about 75% per year. That's a nice return. Okay, so we're going to take a look at ORCL next week. Oh, it's already on the list for next week. Jay, let's take a look. ANTX. ANTX. Hell no. EBS, we looked at that one. DVN. Let's take a look at Devon Energy. DVN. Ooh, check that out. Let's go back a second. Okay, DVN, take a look. A year ago, we're at 46, drops down, shoots up, pulls back. Right here, we're bouncing off the bottom of the year with Devon Energy. Okay, Alex, why not 9? Oh my goodness, why not 9? I forget why I said no. Why did I say no for 9? Okay, Alex, can you see this okay? Monthly options. No. Plain, simple, direct, right to the point. You don't like it, I can't help you out with that one. I don't like monthly options. The numbers just don't work for me. If you like 9, more power to you. I wish you the best with it. Seriously, I do. I like it when people make money. I like when people make money from stuff I tell them. It's nice to be helpful. But 9 has monthly options. I don't like monthly options. The numbers just don't work for me. If you like them, best of luck to you. So Devon Energy, let's check it out. Here's the high of the year, the low of the year, the last 90 days. Check this out. 90 days ago, same thing. The high, low, where was it? Where is it? Look at the movement. Down, up, down, up, down. Look at that very predictable movement. I love predictable movements. This is what I'm looking for on a 90-day chart. The 1 year chart, let's go back. Show it to you really quick so you get it. Okay. Wes, I noticed EOE decreased dividends last year. Okay, I noticed that also. I still trade AEO, but it depends on where they are at the moment. Okay, first thing I want to see on a chart. You guys got to figure out your own routine. I have a routine that works nicely for me. Okay, as a matter of fact, hold on. I'm going to show you something really quick. It won't take that long. The last 90 days. Okay, you see this video? I did this one in 2013. 1 year chart, 90-day chart, 30-day chart. I look at the exact same thing I looked at 2013, was that 11 years ago, 12 years ago? The same thing. Nothing really has changed. For me anyway. The 1 year chart. The high, the low, where was it, where is it, what's the direction? Great. That's the overall. I don't want to buy it if that's at the high of the year. Automatic no. When it's way down here, it might be a no, but I want to take a closer look at what's happening the last couple of days. So quickly take a look. Great. It's bouncing off the bottom. Now, I want to go back to the 90-day chart. That's the first thing I want to see. What does the 1 year chart look like? Then I look at the numbers. Do the numbers work? Great. Now let's look at the 90-day. What am I looking for in the 90-day? I'm looking for a pattern. Okay? First 5 things. High, low, where was it? Where is it? Where's it going? Look at the pattern. Couple of weeks down, couple weeks up. Couple weeks down, couple weeks up. Couple months down. And then you just keep the movement going. See how it moves? Up, down, up, down, up, down. Consistent movement. It's not a straight down. It's not a straight up. It has a predictable movement. That's what I'm looking for. Then I want to jump in and take a look at the last 30 days, because the last 30 days gives me a better idea of where it's going to be this week, where it's going to open up tomorrow. Well, tomorrow she should open up right about here. Well, 30 days ago we're here, 38.60. We jump up, there's the high. The 30-day bottom right there. So what usually happens after a 30-day bottom? Stocks usually go up. Well, we have 1 day to the upside. We have 2 days to the upside. That's what I'm looking for. 2 days to the upside. That's my cue. You guys got to figure out what's right for you. Some guys like 1 day to the upside. Some guys like 3. Some guys like 5. Well, take your pick. See here, 1, 2, third day right there. Bottom, 1, that didn't make it. Bottom right here, 1, 2, third one right here. I'm just looking for 1%. So 2 days to the upside, great. Jump in, jump out, I get my 1%. Same thing here. Okay, jump in, jump out, I make my 1%. Okay, so that's what I'm looking for. I'm looking for 2 days to the upside. So I got that. So I'm actually going to write Devon Energy down for tomorrow because everything looks pretty good. Okay, that's DVN. La 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 la. ANTX. Jay, what the heck is ANTX? And that's never, ever, ever a good thing for me to say, what the heck is that? Well, that's a big fat freaking no. ANTX. Exxon Mobil. Interesting. Okay. High, low, was, is. What's the direction? Going to the upside. Look at right there. Okay, so that looks interesting. 118. The 118s are going for 133. That makes 1%. Great. Here's the bottom here. Back in January, 95.90. A year ago, we were at 103. We shoot up to the high, which was recently back in October, and that was 126. Well, look at your last 90 days. High, low, up, down. Now, we got a 30-day bottom there. So let's go take a look at the last 30 days. Right there. Here's the last 30 days. Here's the bottom. Here's your top. Now she's coming down. She's still coming down. Okay, so I look for 2 days to the upside. So tomorrow it could be lower. It could be lower. It could be lower. It could be low. Don't know. But here's the bottom right now. We got 2 days. By the time we get to the 2 days, this will be gone, that will be gone, and then day 3, that won't be gone. So this will be the new 30-day bottom in 3 days. Well, 3 days is before I'm going to actually jump in, if it looks good. So I'm going to write ExxonMobil. It's already written down for next week. ANTX, we looked at it. We got SPYD. No. Okay, ECL, we already looked at that one. Hello, Mrs. Myers, how are you today? Alex, you got that? Okay. AMD, Advanced Micro Divisions? No. Now, there's a difference between AMD and ADM. I get them confused once in a while, but AMD is a no. ADM is a yes. Is GSBD a good investment? Silky Smooth, how are you today? What is that? GSBD. 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 No. Sorry, I don't do monthlies. I often, LMT, Lockheed Martin. Interesting. Let's take a gander at Lockheed Martin. Not one I usually do because I like to stay under 250. This one's over 500. Some of you out there might be able to afford, $500 shares. Me, not so much. A year ago, 620. Oh, sorry. The high of the year, 620. A year ago, we're at 450. We dropped down to 420, shoot up to 620. That's a nice increase. We drop back down 529, so the 530s are going for 170. We can all say that in unison. Are we ready? 1, 2, 3. Hell no! Why the hell would I pay $530 a share to get a premium of $1.70? No, a $530 stock should give a $5.50 premium, not $1.70. Sorry, no. Lockheed Martin, no. GSBD, okay. I often close out my Fridays for 1 penny and sell Mondays. And Mondays on Friday. Okay. Often busy on Monday morning. Cool. BA. Is that Boeing? BA. Interesting. Ooh, look at the little dip. Look at the little bounce right there. Nice. I like that. Okay, the high of the year way back in December, 270. Bottomed out 138. Now we're at 155. The 155.50s are going for 185. That's over 1%. Okay. Well. Dallas Guns, how are you today? You're a paid member and you're trying to get the weekly stock picks email. Okay, well, I'm going to ask you very kindly. I will check the list tonight because tonight, after we're done here, Parker, you like that? After I'm done here, I send out the week's list and the invite as soon as I'm done here. So I'm like 15, 20 minutes. I'm actually going to send it out to you. So if you do not receive it in the morning or tonight, because you'll receive it most likely by midnight. Okay, HIM is a no. How do I get on the list? Parker, you actually have to join the morning trading group. There's just a bunch of us that get together and we look at all the companies that are up for consideration. So when I show you a list like this is what you guys want to look at. This is not what I look at. What I look at is the dividend kings, the aristocrats, the champions, the companies that are consistently profitable. Those are the ones I look at. So Dallas, by midnight, because right now it's 11:27. We get 3 minutes. I'm not going to look at anything else. We're just going to go through the list of questions. I want to answer all the questions. So Dallas, just make sure you hang out. If you want, send me your number. I'll give you a buzz as soon as we're done. Because you're still here. You're still up. I'll give you a buzz. HIM's a no. Secretariat. Cool. Great idea. How do I join the members group? Parka, join the members group. You come to here, right? Right there. Nope, that ain't it. Right there. Nope, that ain't it. Where the hell is it? Okay, go to Google, put in the 10minutetrader.com, and it should look like why the hell isn't it going in? There it is, the 10minutetrader.com. There you go. Right there. You see that? Once you click on that, that's live trading. Okay? See what it says here? Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. Okay, about us. If you are looking to strike it rich overnight, this ain't it. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. Here's the little video that explains the whole thing. Underneath that, look at this. This pisses everybody off. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. Okay, learn more about this simple strategy. It's a PDF. It's a couple of pages long. Briefly explains what I'm doing. Buying a good quality dividend stock, selling a covered call against it just before the dividend's paid, because stocks have a tendency to go up just before the dividend's paid out. And by knowing what's going to move when, with a simple, safe strategy, I can get a consistent 1% every week. So live trading, join the group right there, blah, blah, blah. Right here takes you to all of my social media sites. Underneath that is all the trades I have done so far this year. 3.6% for the week, 2.6% for the week. Oop, I didn't put that on in that one. Or that one. I'll have to fix that. I'm not perfect. Okay? I do the best I possibly can. So let's finish up these last questions. Secretariat, got that? Great idea. Paid member, okay. Don't go anywhere. HIM, no. JP Morgan, we have to look at another day. Best Buy Beyond, we have to look at another day. Dallas Guns, like I said, don't go anywhere. Where do we do FL? Foot Locker? Did we do a Foot Locker? No, we did not. JP Morgan, I think we went, Estee Lauder. I haven't got a chance to do that. My Estee Lauder got bought out. Damn. You like that one? 86 toe tag. I got, my one of my good friends, we actually joined the service together just out of high school. We joined the service together. He was the best man at my wedding. He was one of the groomsmen. He actually, died on his way to work. And so did his brother. It was terrible. Should have bought UMAC last week, Wednesday. Okay, thank you for that. Alex, glad you're doing good. Jennifer, DPZ, check with me tomorrow night. Okay, we'll be back again tomorrow night, same time, same bad time, same bad channel. How about Macy's? Ooh, I like Macy's. Macy's is on my list. XLM, no. WSP, never heard of it. What company is that? BA is... Whoa. Jade invites you to co-host. Jade, terribly sorry, I don't know you, so it's going to have to be a no. Dallas, don't put your phone number here. You're going to get a lot about weird people calling you. Okay, oh, hold on a second. I'm going to write down. I'm going to give you a call in like 2 seconds as soon as I get off the phone. Okay, Dallas, I'll give you a buzz in a little bit. No, we haven't done Pfizer yet. It is on my list. I do like Pfizer, but I haven't done that. Do you offer in-depth strategy with the membership program? Yes, I do, Alex. However, I really prefer people to perfect this one first before I show you other strategies. Other strategies can get complicated. Other strategies are more profitable, but also have more risk. More risk, more profits. More profits, more risk. Goes hand in hand. I like the simple, safe 1%. Dennis Mancini, dude, it is 11:32. I'm just signing off. Literally walked over to right here to turn this off, dude. Terribly sorry you just got here, brother. Tomorrow night, 9:30 to 11:30. It's 11:33. Catch you tomorrow. All right, share the love. Okay, out of here on this channel. Okay, there. Yes, I do. Okay, so that's it. That's everyone. Wonderful. And nope, I can't copy that. Parka, thanks, brother. Catch you tomorrow. Catch you tomorrow also.